Bloomberg Audio Studios. Podcasts, radio, news.
The Stock Movers Report, your roundup of companies making moves in the stock market, harnessing the power of Bloomberg data.
Let's have a look at some stocks on the move today in Europe. I'm Caroline Hepker alongside Tom McKenzie, and we're joined by Bloomberg reporter Chloe Millay. Chloe, good morning.
Good morning.
Let's start with Nestle then. A big cut to jobs, 16,000 jobs going at Nestle. What's been the reaction?
Well, quite positive. So Nestle actually had two good news for investors today. So first, it reported stronger than expected sales growth on the back of both price and volume increases, which is quite positive given that it really has struggled to revive volumes over the last few months. And then the other big thing, which is the thing that you just mentioned, which is that plan to cut 16,000 jobs over the next couple of years. So that's a massive headcount reduction. It's a really bold start for the new CEO, Philippe Navratil, who joined just last month after the office romance scandal that we all remember that led to the departure of the previous CEO, Laurent Frex. Some analysts said that this is helping to restore investors' trust in Nestle, but it still remains quite fragile. So going forward, Navratil doesn't really want to rock the boat too much. You know, he's previously said he wants to maintain the strategy of boosting spending on advertising and betting on fewer but bigger product initiatives and getting rid of some underperforming units. Perhaps the difference there in his strategy is that he's being maybe a bit more assertive about it. So we'll see how that goes going forward for Nestle.
This is an interesting one in the luxury space because LVMH's earnings and the pop that we saw in its stock price yesterday was pretty headline grabbing, certainly head spinning, and the gains are coming through for LVMH again today, up 0.5%. But it's a very different story for Kering. What's going on there? The owner of Gucci.
Gucci, yeah. So it was a really good day for luxury yesterday. As you said, you had the update from LVMH yesterday that really drove the shares for all of those names. But then today, Kering got cut to a sell rating at Berenberg, and that is driving down those shares. So Berenberg cut Kering to a sell and also LVMH to a hold, and said that that luxury sector faces structural demand issues, and there's continued pressure in China. That this is not completely gone. There's low consumer confidence, especially among aspirational consumers, and then there's also a change in consumer behavior in younger generations. And Berenberg analysts said that this will be particularly tough on Kering and LVMH, whilst companies like Hermes, for example, will be a little bit better positioned because they have less exposure to the aspirational end of the market. So it seems like there's quite a cautious tone on the sector, and in particular for Kering, despite a massive rally in the shares over the last few months.
Okay, so that on the luxury sector. To banks, though, obviously we had the big Wall Street banks earning. We've got lots of the UK banks coming out next week with their results. And today, Helsinki-based Nordea Bank announcing a spate of share buybacks.
Yeah, so Nordea is actually the first big European bank to report in the earnings season, and it looks quite positive. So it launched a €250 million buyback. Net interest income also beat expectations, and that is because the CEO said that Nordic companies had a renewed appetite for investments, which meant that it translated into increased demand for lending. It's quite reassuring for Nordea, and then also could bode well for the rest of the European banking sector. As you mentioned, we've got UK banks coming next week with Barclays, Lloyds and NatWest, and then also a bunch of Nordic banks reporting as well, and UniCredit next week. Loads of things happening. There's a few things that investors and analysts will be looking closely at for those European banks. We know that lower rates are feeding into pressure on net interest income. So it's all about how banks are able to mitigate that. And then also credit quality because of macroeconomic uncertainty potentially feeding into bad loans. But those measures were quite steady for Nordea. So we'll see what we get as the rest of the season progresses.
The Stock Movers Report from Bloomberg Radio. Check back with us throughout the day for the latest roundup of companies making news on Wall Street. And for the latest market-moving headlines, listen to Bloomberg Radio live. Catch us on YouTube, Bloomberg.com, and on Apple CarPlay and Android Auto with the Bloomberg Business app.